Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week of 26th to the 31st of May 2019. This time I am not able to record with my camera as I always do, because not sure why, but it doesn't really work here. Try to connect, I don't know. Anyway, so this week, until I find a solution and make it work again, I'll record. You will just will have to imagine uh, my picture if you would like. So, of course, just joking. So let's begin. This was a very good trading week. Many of the setups and the ideas we've been covering worked pretty good. So as always, we will be reviewing the previous week. This is ready for you on the blog, right? So you got the blog, and this is posted for you always on Monday, which means on the current weekly forecast that I will be preparing, you would get this text format for the PDF, for the forecast, sorry, in the blog ready on Monday by my team. So let's review what do we have here and prepare our plan for the coming week. So the first thing is the euro pound, skipping the long-term idea based on the cycles we are after long-term sells. However, on the shorter view, we wanted to see a pullback from this area, one more shot, and then we will very likely be heading towards the next longer term journey for a sell. So we have this critical zone marked for the euro pound. We are still dancing here, and look what the pair is preparing for us right now, and might be very interesting for this week. We start to see the slowdown, the turnaround. We start to see spikes on the top, and mainly a lot of heavy bearish candles. You see that right here. So at the moment we finally managed to create some kind of lower lows, we can discuss about the short-term drops to be created. And this is pretty much the plan. I expect it to make the push, and once it does, very likely we would see one more rally, which later on, again, very likely, it's early to judge, we would be looking for sells. So for buys. Once again, I feel I got it confused. Short-term sells, push, and longer-term sells following. And of course, we would need our bearish divergence be created there. So on the shorter view, here is the false break finally created. We will want to see that making the lower lows, and then start looking for possible short-term sell rallies, of course, with bearish evidences. Next one on the list was the euro versus the Aussie. Now our idea again was looking in this cube critical area. Also we had massive resistance area from the statistical numbers, and we wanted to see drop down. So let's take a look what happened since. Basically it was very boring week for this pair. It was not creating higher highs, but it took it few days until the momentum gained. My personal view remains bearish, and I would be expecting here the two waves to complete, or at least for a while to keep it inside this ranging correction. So my short-term sell view remains on, and I'm again dealing here with the sells. Now euro versus the Kiwi was our next one on the list, and the view is the level of 61 up to 100. We should be looking for bearish evidences. Let's take a quick look. What do we have here? So let's mark the levels once again. Fibonacci expansion to measure the cycle, right? So we are still fighting the 61.8 zone. Try to cross that. Never really reached to the exact 100, still around the 61.8. We are good with this, with both levels. The divergence is in play, meaning the 4 hour is very likely to provide a corrective cycle. So we can expect 2 waves down, or at least some kind of a range correction before the trend continuation. And this is how I think the pair is going to behave. Drops, which later we would very likely be able to go and enjoy further continuation upside. Okay, why would we expect longer term continuation upside? Based on the pattern and the structure that we have from the weekly time frame. So this is very likely a scenario to follow. So this is for the euro versus the Kiwi. And now I would like to ask 2 minutes of your time. If you are new to the channel and you enjoy the work, I invite you to subscribe to the channel. Below the video in the description you have the link to join our completely free Telegram channel, where you get trading ideas, setups posts, videos, and many more amazing things, including free education. Again, this is open channel for the whole community, so you are invited to join us, and the link to do so is right below the video in the description. And if you enjoy the work, please hit the like button, leave your comment in the comment section, and feel free to share with any of your friends. So let's go back to our view. So this is the Euro Kiwi, and let's review the next stuff and prepare the next plan. New Zealand and Canadian, our expectations were bearish until we reach the level of 100, and if we cross 100 we are going to the 161.8, which is around 0.8530 area. So meanwhile, let's take a look what happened here. We were blocked by the 0.87, which was the level of the 100. Sorry. Here we are. Block at the 0.87 psychological level. Supportive area, bullish divergence. So yes, we can easily see here the pair fighting for some time before its further continuation down. Looking lower, here is what we face. We had a Bollinger Band movement from band to 20 candles right on the Bollinger Band, and we can also see the divergence supporting a stoppage on the daily chart, as I mentioned before. The weekly doesn't really have any bullish reasons, so everything here is short term related. We have the trendline breakout, and we have the band to band right here. So this is what I was confusing. So we had, once again, we had a ride on the 20 candles, over 20 candles on the Bollinger Band, bullish divergence to provide and confirm the expected correction. So what's from here, I would expect the pair to complete 2 waves correction before any further move down. And the 1 hour chart provides a very nice pattern for us right here. So the way I see that, I would be after double wave corrections and looking for the second rally to begin. This would be my plan. Cautious area, be careful area, should be around the 61.8 Fibonacci, because if we cross straight move below 61.8, not in 2 waves, but straight move, 1 move below 61.8, this is a warning sign, and then it's best to abandon the idea. Meanwhile, again, I'm short term expecting the rallies to happen. After, I would be looking again for sells. So this is for the Kiwi versus the CAD. So far working good. Now let's see how it develops this week. Dollar yen, our plan was looking for rallies and sell as long as we remain below this top. So here we are. Well, you get it from here, right? Rallies and drop. We have a good run here. The bearish divergence happened on the 4 hour chart. The trend line was broken on the 4 hour chart. Was good. and the pair continues. What's next? We don't see any signs against from the weekly. Daily, very likely to continue until it might create some divergence. As for now, no real crazy signs against. The next level is around 108.50, slightly above. If we break below, then 107.30 is the one to follow. Bearish view was and remains the plan. Okay, so for all those of you who are involved, enjoy. Aussie versus the Kiwi, bullish view with one more drop lower or after creating higher highs. So let's take a look. What did we have on this pair? We had the higher highs. We never managed to get the momentum like this up again. That's pretty concerned situation here, which might open the doors for the next low to be developed. So here is what we do. We got the higher highs, as we discussed, as we wanted to see in one of the scenarios. From this area, we got a bearish divergence. When we got a bearish divergence, we are out waiting for the bullish evidences. Here we go. This is a bullish hidden divergence. So if we manage to start and make the rally once again, we expect a good continuation forward. If we break through the old Fibonacci level, right, and continue lower, next doors opened to these areas. Let's put the Fibonacci's. Okay, next level will be 104.50 to the dropping lows trend line. We'll be looking for a bullish divergence there, and again for longer term buys. So patience is required with the Aussie Kiwi, and again, don't be in any pair when you start to see signs against you. Divergences, straight move against in one leg, all that are warning signs. Remember, it's best to step back, to cut when required, and to wait for the right opportunity to happen next. There is always tomorrow. There is always tomorrow when it comes to trading. Euro versus the CAD. The view was bearish, right? We wanted to see drop, rally, and sells. We got a beautiful SPT swing point from the Academy Club. We have this strategy in the Academy Club. We got a beautiful cloud situation and a scanner, so we expected a push down. This push down happened right here. That was the view. Beautiful push down happened. After that, we got a block of a bullish divergence, which means the correction should happen again, as we wanted to see. Drop, correction, and sell continuation. So the correction is there, the bearish hidden divergence is there, but take a look what we face after the correction. It's one leg at that moment, and it's crossing through 61.8. Now, it never managed to cross and hold above. Spiked a bit and retraced, which means the bears are still fighting. Now, here is the thing. If we continue lower from here, one more leg to create some kind of divergence here, wonderful, no problem. But if we return at the beginning of the week and close above 61.8 to hold above this area, abandon the bearish view. It has to hold and be clear by holding. If it doesn't, that's a warning sign. A warning sign that this longer range might be holding for a bit longer before the longer term sell continue. Until then, the view remains bearish, but again, pay attention to the warning signs as just explained. Very, very important. Okay? Next one on the list was the pound versus the Aussie. Triple cycle, bearish divergence. We are after sells. As you can see, based on the crystal ball, we also had, let's take a look here, pound Aussie. We also had a wonderful hold with the statistics. Now take a look how beautiful the bearish expectations are for the beginning of the week. If we manage to face some kind of rallies, that should be a great sell opportunity. Now let's see from the technical view how it looks. So we were bearish, we got the bearish move, it was pretty beautiful. A little bounce with some rumors from Britain and one more drop. Now look what the pair has for us right here. Clearance area. Right? Slow down by turning a bit, right? So we want to see the pair start to getting some higher highs. It's a triple cycle. We want to see gaining some momentum. Corrections until the beginning of the next month. And then we're very likely for sells. So for long term, our plan remains bearish. But we would definitely enjoy to see some rallies for this pair start to happen. Okay? So that's a critical zone here, and I would expect some pullbacks and sell continuation. Next one, New Zealandian dollar. Our view was looking for, or go here, looking for another push lower, retracing up, and then for sells. Let's take a look what do we have from this pair right now. The push lower did happen. The retrace began. And how do we approach it right now? This is a double cycle. 61.8 level hold. Bullish divergence, 20 candles right. Bullish divergence, 20 candles right. Engulfing with one more bullish candle. Definitely a good sign for correction. This correction we will want to go and sell later on. So how do we approach here? Retraces, look for bullish evidences, and looking to enjoy the buys. This is the New Zealand dollar. Now I want to take a look on the statistical view. Look at here. The 20s. How critical are these days really are, right? That's what happened exactly on the previous week. The statistical indicator, the crystal ball, enjoyed us to hold through these days and start the retrace. Okay, so pay attention to that. That might be a very interesting buy opportunity of the coming week, maybe even longer. Oil, the idea of ours was bearish looking to sell, but before we go to the commodities, one more interesting pair start to be seen from my point of view. This is the euro dollar, and look what we have here. We are next to the 61 area expansion, holding it. A false breakout completed on the daily chart. Bullish divergence ticks up. This is an engulfing with one more beautiful candle, verification candle. So if we manage to break through, I would not be surprised if the euro dollar will start to provide the buy opportunities. And this is the way I see that. It's also false breakout on the 4-hour chart, higher highs. So that's the place we could start looking for the buys. Ideally, once again, we go and cross first of all the daily trend line, then retraces and buys. My point of view for the euro dollar is now bullish. So this is a very good addition from my point of view to the list. Oil, we were after sells. That was the view. Right, 1, 2. So let's take a look what happened since. Retrace and boom. What of the levels been reached of the retraces? 38.2 was reached perfectly. 50% retrace might be the next one. So I still remain bearish here as long as this trend line holds. My view remains bearish. Gold and silver, personally, not too clear to me at that moment, so I stay neutral on them. And let's take a look on, where is the index? Here we are. So what do we have on the index? Let's take a look on our plan. One more high until divergence completes. One more high until the divergence completes. We got it. We got a false breakout, and we got a beautiful engulfing and verification candle. Classical scenario with the divergence. So once again, a mirror to the euro dollar. If we manage to go below the trend line, ideally below this low, start looking to sell the rallies. And here we are on the indices. So a lot of followers ask me always, Vlad, what do you think about the indices? So here is what I think. My personal view for the long term remains bearish, as you know. Triple cycle, I would expect one more drop lower. On the weekly chart, we got a bearish hidden divergence, which is wonderful. Sorry, between these highs. Now, the daily chart with its trend lines still kind of flirting around the trend line. Nothing too obvious. However, the index does try to create lower lows. So the way I see that, we are for sells, and I would be looking for sell setups for the DAX. And that could start from here, that could be slightly higher. And as long as this trend line holds, I would be looking for sells and would call that my invalidation. I would be very, very careful here, because if it doesn't happen from here, we are going for one more fake high before the next sells take place. So I will be very, very careful here, and yet back to the bearish view. And the NASDAQ, still early, but this is what I'm following to see how this month ends. One more week is what's required here. If that's end as a false breakout and engulfing, sell the rallies is going to be a good plan for us here. So let's see how this week will actually end. So that's pretty much it for this week. A lot of great opportunities. As you can see, there are several more things building up, like the Aussie dollar, for example, and the other Australian pairs. I personally need more verifications there before they become to my list again. So what going to happen is I'm going to follow that closely, and if very interesting opportunities come in, of course you can expect to get them in the live trading rooms. If you are not yet part of our club, I invite you to join me and my trading team in Traders Academy Club. Get yourself the wonderful SPT strategy with our wonderful indicators, the scanners. Enjoy the live trading rooms and trade with us day after day. And of course get access to 24/7 Telegram channels. To join us, just follow the link below the video in the description. And I hope to see you with us. Thank you very much for your time watching this video. I wish you a wonderful trading week. And again, on Monday, I'll be publishing the review, the forecast in a text format. And as always, week after week, we review the forecast, see what's relevant, what worked, what failed, what has to be updated, and preparing the next week. Thank you once again for your time. I wish you wonderful trading. I'm Vladimir Ribakov from Traders Academy Club. See you soon.